Hello, Avila Advantage students. We are now in week 8, so just about wrapping everything up. This week you're going to read chapters 30 and 31. You're going to look at chapter 30 of government spending, chapter 31 with the impacts of government borrowing, and should everything from week 7 graded shortly, just make sure to submit that final paper for week 7. In your final week, you're going to have your homework, your regular forum discussion, final exam, and your last quiz. So just stay on top of everything. Make sure to wrap it up by the end of the class, because the next Sunday at this time, we will officially close the course at midnight, so nothing will be accepted after that time period. So it's just very important to wrap everything up, get everything done this week. I want to say I've enjoyed working with you all the past 8 weeks. Looking forward to the final forum discussion to wrap things up with this week's topics with Chapter 30, looking at government spending. At the national level, this is a little bit of debate right now. Trump trying to decide where he wants to allocate spending. There's some discussion about cutting back such departments as the Department of Education, spending more on defense. He has a certain view of how things should be, and it will be interesting to see how this plays out. So also just note that on the state and local level, the amount that we spend by the government is equal, if not more, than on the national level. So we have many levels of expenditures, and we also have to collect taxes to take in for all these expenditures. And what's happening now, especially in the state that I live in, Missouri, is that it's kind of debatable whether we're collecting enough in taxes. If we're trying to support all these services, such as especially higher education. I know University of Missouri has been hit pretty hard. But yet that also concerns you about the quality of education that the state of Missouri is supplying to its citizens. So something has to be resolved, and it's always going to be an ongoing issue. At the national level, state level, or local level, what is priority for us? And obviously to take out some of the spending, we have to issue debt. And the question comes down to what is good debt? And that's what a lot of Chapter 30 looks at too. These questions of thinking about percentage of debt to GDP. Right now we have about 100%, and economists will debate, whether that's good or bad. What is the threshold level? I think a lot of economists would agree, though, that what or how are we using this debt for? If we're using it for something that's going to put for infrastructure, for long-term growth, for investment, that's probably a good thing. If it's on frivolous activities, that's not a good thing, because it's not going to lead to more production and growth in the long run. With this, it talks about expansionary fiscal policy. Think back to shifting out of that aggregate demand curve. Well, expansionary fiscal policy can be done by lowering taxes, or it can be done by more government spending. If you're going to do more government spending, obviously you have to do more borrowing to do that. And they do that in the form of treasury bills, notes, and bonds. Actually, to have a government borrowing market is actually a good thing for stock markets, financial markets, because it's a very liquid place to park your money. That means if you want to convert it to cash, and it's an easily tradable market. So the idea that we would ever have zero debt is probably a bad idea, because it provides so much for the financial markets. But how we utilize that debt with interest rates going up is going to be another question. To see how we're going to be able to pay for that, because somebody has to pay for it in the long run. It may not be our generation, but it could be future generations that have to consume less. So what burden do we put on our children? We're going to provide enough economic growth to be able to maintain this debt. That's a good question to ask. Chapter 31 addresses some of these impacts of government borrowing. It says, especially from a trade perspective, if we're going to consume these goods and services, and a lot of these are imported, then it has to be foreign capital that's going to buy these treasury notes, bonds, etc. That's the only way we're going to be able to consume that. At some point, if they were to ever stop, we would not be able to consume the amount of goods and services that we do today. And they give some examples in the textbook too that sometimes government borrowing can lead to trade deficits, especially if it pushes up the price of the American dollar. That makes our exports more expensive. It makes imports cheaper, so we'd be more likely to import more. So there's a lot of variables, though, that come into play about the valuation of a dollar of any currency. But they just give one viewpoint on this. The last thing I'll wrap up for this week is they talk about crowding out in Chapter 31. The idea of crowding out, I want you to think of it this way, is that if the government has to compete against private markets and having to attract investors, it may pay a higher interest rate. And the government rate you can think of as a risk-free rate. I mean, the government can always pay back their money. Sprint and Ford, they cannot guarantee interest on their debt or their bonds. But with the government, it's a safe place to park your money. Well, what might happen, there are attempts to try to push out the aggregate demand curve through fiscal policy. It may actually be pushed back in because the private sector can't afford to compete against the government market. And that can actually deter growth. So the question of how much crowding out occurs is of much debate too. So, well, those are some insights from the chapters this week. Again, I want to say I've enjoyed working with this cohort this late part of winter, early part of spring. So hopefully we'll see some positive things continue to happen with our economy in 2017. We'll see possibly more interest rate hikes too. So, but I think you all will have a greater appreciation of macroeconomics after this course, and continue to pay attention to what's going on in the economy. So take care and enjoy the last week.